Hello everybody, welcome to today's fundamentals. Hello Peter.
Hello.
How has the FX market been behaving?
Well, the US dollar edged a little bit higher. Yet I would say that the greenback's bullish tendencies remain unconvincing for the time being. I would note that we may be having a switch in the sense that the last high impact financial release we had was the US CPI rates for December. That was last Thursday. Since then, practically financial releases were of medium to low impact. And I think that's about to change. We're getting our first high impact financial releases from the US today, which more or less could put fundamentals in the background regarding the market's direction.
Mm-hmm. Yeah. Was JPY on the retreat during today's late day session?
Yes, we had the awaited BOJ's interest rate decision. The bank, as was expected, maintained its interest rate unchanged at minus 0.10%. The thing which actually pushed JPY lower was that the bank actually failed to tweak its monetary policy further. Mm-hmm. We had up until December a bank which maintained an ultra loose monetary policy. In December we had a tweak where practically the yield curve control target percentage was altered and the tolerance level was raised from 0.25% to 0.5. The market expected that the bank would tweak that even further, raise it to possibly 0.75%. Or there were even analysts which were discussing the possible expanding of the yield curve control policy. It didn't happen. Mm-hmm. BOJ maintained the settings unchanged as they were, maintaining its ultra-loose monetary policy once again. That was in a direct contrast to the market sentiment and weakened JPY substantially at the release and the minutes following it. I would be noting though that also the bank reiterated that it will continue buying Japanese government bonds to any amount necessary to keep yields exactly low, up until 0.5%. And I would also be highlighting that BOJ Governor Kuroda stated that the bank, if necessary, will ease its loose monetary policy even further. Mm-hmm. So more or less, the bank pushed back against market expectations. And I would note that for the time being, we expect the bank to remain dovish, possibly up until April when BOJ Governor Kuroda is to step down. But I wouldn't get my hopes up yet in the sense that even possible persons which are about to follow Kuroda, some of them are also quite dovish. So we will have to wait and see who the new governor will be, and should it be someone which may imply more, or if you prefer, a less dovish policy, that could provide some support for JPY. So overall, big fundamental changes, in our opinion, could happen in Q2 and afterwards.
Mm-hmm. And how about the US stock market?
US stock market sent mixed signals yesterday. Mm-hmm. There is, in our opinion, the earnings report releases of yesterday, I think there was a negative surprise. We had a number of companies releasing the earnings reports. The earnings reports, especially the revenue figures, were in the reds. It was below market expectations. And that's understandable in the sense that the Fed's monetary policy tightening may has tightened the liquidity of the market and thus dropped the revenue of companies. It was characteristic that, say for example, Goldman Sachs missed its revenue target slightly, but the earnings figure per share was considerably lower. Mm-hmm. So profitability was hit as well. And in this case, we may be seeing Goldman Sachs having an overhead problem here. Overall, I think that the earnings reports of yesterday sent out a warning to the markets to lower its expectations, and especially about the coming quarters. And should the earnings reports in the following days also be in the reds, we may see US indexes, stock market indexes starting to drop, and the market shifting towards a more cautious tone, and most probably more towards safe havens. That could provide some support also for the US dollar, while riskier assets may suffer somewhat.
And what's on the calendar for today's European session?
Well, we already had UK's CPI rates. There was a slowdown as expected from 10.7% year on year of the headline rate to 10.5% year on year. Okay, definitely the slowdown may be marking a peak in inflationary pressures, but the rate remains at very high levels. And in our opinion, it intensifies the pressure on BOE to actually follow a more tight monetary policy. I would say that it would also be adding more pressure on the UK government to actually face the cost of living crisis in the UK right now. In our opinion, the slowdown was too narrow to be convincing that actual inflationary pressures in the UK economy have started to slow down and cool off. I would be noting also that right about now we must be getting from the Eurozone the final HICP rate. It's expected to confirm the reading of the preliminary rate, which more or less slowed down in comparison to November, which that would be a positive sign, yet that would also imply that the ECB has still some tightening to do in order to cool inflation lower. That's it.
And what do we get in the American session?
We're going to be very busy in the American session. I would be noting from the US 3 financial releases. The first would be the PPI rates. So we're talking about inflation on a producer level. And should we see a slowdown as expected, that could weaken the US dollar, as that would imply that inflationary pressures are actually cooling off. The second would be the retail sales growth rate. And I think that's going to be the main release of the day in the American session. The retail sales growth rate is expected to dive deeper into the negatives, showing a contraction of retail sales for the month. And if actually so, could weaken the US dollar, as that would imply that practically the average US consumer is not willing or able to actually spend more in the US economy. And the last reading would be the industrial production growth rate of the US. It's expected to tick up from minus 0.2% to minus 0.1 on a month-on-month basis. However, despite the slight improvement, it's still in the negatives. It's not convincing just yet. From Canada, we're getting the producer prices growth rate for December. And that's expected to improve slightly, but remain in the negatives. And mind you, that the CPI rates of Canada yesterday for December slowed down more than expected, the core rates. And that was a definite signal that inflationary pressures in the Canadian economy are dropping. Oil traders, just before the Asian session starts, may turn their attention towards the AP weekly crude oil inventories figure. Mind you that last week we had a substantial rise of US oil inventories by 14 plus million barrels. Should there be another substantial rise of oil inventories, that could imply that there is a slack in the US oil market and could weaken oil prices.
And how about tomorrow's Asian session?
Tomorrow's Asian session, I would be highlighting 2 releases. The first would be Japan's trade data, especially the trade balance figure. An improvement could provide some support for JPY. But we have to note here that JPY usually is not financial releases driven, but on a macro level, it's important. I think the main release of the Asian session tomorrow is going to be Australia's employment data. We're expecting the employment change figure to drop, yet remain in the positives, while the unemployment rate is expected to remain unchanged at 3.4%. That's one of the lowest unemployment rates that Australia had for over 20 years or so. So overall, I think that's going to be showing that the employment market in Australia remains tight and could provide some support for the Aussie. That's under the assumption that the forecasts are going to be realized.
And what speakers do we have scheduled on the monetary front?
We make a start with the European session, where we have ECB board member Schnabel. We already had ECB Stegalau. I think, though, that Schnabel may be more interesting here. And in the American session, we have a number of speakers. We have Atlanta Fed President Bostic speaking in the American session. I would be also noting St. Louis Fed President Bullard, Kansas Fed President George, Philadelphia Fed President Harker, and I would be also noting, just as the Asian session starts, Dallas Fed President Logan. Overall, should the Fed policymakers continue to show that an easing in the Fed's aggressive hawkish stance is in order, and the downshift in the rate hikes is also in order, that could intensify market expectations for a downshift of the Fed's rate hiking path and could weaken the USD.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
Welcome to the technical analysis part of the presentation for the day. My name is Peter Iosif, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index chart. It's the 4-hour chart. All charts to be presented are to be of the same time frame unless otherwise stated. Now we can see here that despite some slight bullish tendencies during today's Asian session, the US dollar index quickly corrected lower. Overall, the movement tends to remain in a sideways motion. So that tends to explain also the idea that most probably the sideways motion is to continue. There are some slight bearish tendencies though, and those are more evident with the RSI indicator, which has dropped considerably. It has reached the reading of, let me have a look, 39.5. Could be implying that the bears are coming, but for a bearish outlook, we would require a clear drop, a breaking of the 101.30 support line, and the price action to start aiming actively for the 99.55 support level. On the other hand, a possible bullish outlook Now for a bullish outlook, I would require clear breaking of the 103.05. That would be practically a clear rise above these peaks here. And the price action to start aiming for the 104.55. For the time being though, we tend to maintain our bias for a sideways motion to continue between the 103.05 and the 101.30. Mind you that volatility may rise a little bit given that we have a number of high impact financial releases from the US today, which traders could be affected by opinion as they could be affected by the opinion stated by Fed policymakers, which are scheduled to make statements today. Let's have a look at Euro USD here. We're adjusting the chart. Okay. Euro USD, despite the slight rise in today's European session, we tend to maintain our bias for a sideways motion to continue between the 1.0935 and the 1.0730. A slight bullish bias given that we have an RSI indicator at the reading of 59.4, but nothing convincing quite yet. Nevertheless, for a bullish outlook, we would require clear breaking of the 1.0935 resistance line and the price action to start aiming for the 1.1055. Let's have a look where these resistance lines actually are resting. Okay, we have a number of peaks, touches here, so that makes the R1 pretty valid. Also, we have touches here for the R2. Okay, I'm keeping them. In case we see the bears taking over, we may see the price action dropping, breaking the 1.0730, a level which provides support here, and start aiming for the 1.0580, a level which held its ground and served as a lower boundary of the sideways motion around December. It was near the mid of December. For the time being, we tend to maintain our bias for a sideways motion to remain between the 1.0935 and the 1.0730. It's characteristic how the price action after the sudden jump in the early European session today is already correcting a little bit lower. And note how the Bollinger Bands have narrowed, also implying lower volatility for the pair. Okay, let's move now to cable. Nice upward movement. It has broken the 1.20 to 20. Before we move on and discuss direction possible levels, let's switch the role of the R1, 1.20 to 20 into a support line, given that the price action has moved decisively higher. Let's go hunting for a new ultimate resistance line. So there was some support at this level. You can see it here, 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 aimed for here. Seems to be pretty valid, with the next being this top here, or even these peaks here as well are quite valid. For the time being, I'm going to be keeping this support line and turn it into a resistance line, given that the price action is lower. And it's the 1.2985. Let's readjust the labels as well. starting with the S3, which is now being placed at 1.1650, the S2 at 1.19, the S1 at 1.2220, another two is missing here. The R1 new first resistance line now being placed at 1.2345. The second resistance line at 1.2660. And the ultimate resistance line at 1.2985. Locking everything in. For the time being, we tend to maintain a bullish outlook because there's a nice upward trend line forming. That's one. It seems that the pound is picking up strength. Please note how we have a series of higher peaks here and higher truths, which tends to support the idea of a bullish outlook for cable. Also note how the RSI indicator has reached above the reading of 70, which on the one hand displays the dominance of the bulls. On the flip side, though, tends to more or less imply that the pair may be reaching overbought levels and may be correcting a little bit lower. For the time being, though, and as long as the price action remains above the upward trend line we have mentioned, we will be viewing such a correction lower as a mere correction, nothing more. For our bullish outlook to change, before we move to that, let's see what the next possible stops are for the bulls. The first is the 1.2345, which rests on this peak here. But should there be a genuine bullish movement here, I wouldn't be surprised to see the pair breaking above the R1, 1.2345, and take aim of the 1.2660. On the other hand, should the pair stabilize, I wouldn't be surprised to see it breaking the upward trend line, yet at the same time remaining in the spectrum of the 1.2345 and the 1.2220. For a bearish outlook, no matter how improbable that may be, it's still a possibility and should be covered. For a bearish outlook, I would require a clear breaking of the upward trend line, and also a breaking of the 1.2220 price action to start aiming for the 1.19. Some of you may be questioning whether that's possible within 24 hours. It is. Cable has been known to have wider movements than this one within 24 hours. Let's have a look at USD/JPY, which jumped during today's Asian session. Here we are. Pretty happy analyst. It's interesting how the pair jumped, aimed for 131.80. We warned about the possibility that should BOJ actually fail to provide the hawkish tweet that the market was asking for, USD/JPY would jump. It did. We also mentioned that it would break above the 129.30. It did. Aiming for the 131.80. Didn't quite catch it just there, but came pretty close. And on the other hand, it's interesting how the 129.30 seems to be providing some support right now. And I think that's more interesting if we drill out to the half-hour chart. Yep, 5 minutes. See how it's actually flirting with the support line. Former resistance line now turned to support. Let's make the necessary corrections. Definitely this is going to be turning into a support line. for now at least. Let's go hunting for a new resistance level. Okay. I would be marking this show here. And the next resistance line would be somewhere here. On this peak here. Let's keep that. And that would be in red. The 1.3536. Let's widen the margins a little bit here. Correct the labels. S3 now being placed at 1.2475. S2 at 1.27. S1 at 129.30. R1 at 131.80. R2 at 133.90. And R3 now being placed at 136. Locking everything in. It's interesting also how the RSI indicator corrected lower has reached and is actually now running along the reading of 50, which may be implying a rather indecisive market for now. However, that could change easily given that the effect of BOJ's interest rate decision is slowly fading away. And I think that in the next 24 hours, the main driver for USD/JPY may prove to be the US dollar rather than the JPY as such. So we may see some increased volatility here. For the time being, we tend to maintain a bias for the sideways motion to continue. Yet, should the bearish sentiment, or if you prefer the correction, which has already occurred, intensify, and the bears actually take the reins once again, we may see the price action breaking the 129.30 with the next possible stop being set at 127. On the other hand, should the bulls take over, I wouldn't be surprised to see the price action rising, breaking the 131.80, and start aiming for higher grounds. For the time being though, a sideways motion seems to be in order, maybe even some slight bearish tendencies. Let's have a look at USD/CHF. Whoa, that was a drop. Okay, note how USD/CHF has dropped considerably lower, breaking the lower boundary of its past sideways movement. For the time being, that forces us, in conjunction with the RSI indicator, which is at the reading of 30, to switch our bias for a sideways motion in favor of bearish outlook. Definitely the 0.9210 will have to be reversed from a support line to a resistance line in red. And let's go hunting for a new ultimate support level. We are now at S2. Here we are. There's a nice true right here. It's a little bit narrow, true, but I think there was a nice downward motion which was reversed. I'm keeping this. We could set it also here. And there is an advantage here. The advantage is that we have the one touch, double touch. Seems also to be valid. Definitely the next support level would be somewhere here. And we're talking about early January last year. Okay, in green, this would be the 0.8825. Yep. Let's make the readjustments also on the levels. Resetting them. Starting with the R3, which is now being placed at 0.9450. The R2 at 0.9330. The R1 at 0.9210. The S1 at 0.9090. The S2 at 0.8940. And the S3 at 0.8835. Let me just confirm this. Sorry, that's 0.8825. Small correction here. Locking everything in. So we're switching our bias for sideways motion in favor of bearish outlook. And that's contributed practically to two elements of the price action. The first is that it has broken the low boundary of the past sideways movement clearly. The second is that the RSI indicator is running along the reading, actually just below the reading of 30. It's at 28 right now, which on the one hand tends to imply that, or if you prefer, showcase that the bears are in charge. On the flip side, though, may also implying that the pair may have reached overbought levels and may be ripe for correction higher. In case we see now the bulls taking over, I would expect the price action to rise, break above the 0.9210, and start aiming for 0.9330 once again. On the other hand, a stabilization of the pair is also possible, and that would be possibly implying that the price action remains between the 0.9210 resistance line and the 0.9090 support line. I would be noting one other element though of the price action, the fact that the price action has dropped so deep lower that it has broken the low Bollinger Band. That would be another indication for a possible correction higher. Yet in this case, I would expect the price action to rise and remain below the 0.9210 resistance line. Okay, let's have a look now at the Aussie. Okay, we have an alteration here. There are still some bullish tendencies, but definitely the upward trend line is changing. But it's still there. It's shifting to the right, lowering its slope, but it's still there. I think it became clearer at this point. Definitely this, the 0.7010 resistance line has to be changed as it has been broken, and switch into a support line. Let's go hunting for a new resistance level. I would be choosing this peak here. It's a little bit off, I know it, asymmetrical, wider, but in my opinion, it's a beautiful peak which has to be repeated here and provided support here, so the level seems to be pretty valid. That will be in red, the 0.7455 resistance line. Readjusting the chart. Let's correct also the labels. The S3 now is being placed at 0.6740. Sorry about that, my bad. Definitely 67, not 3740. The S2 is being placed at 0.6880. The S1 at 0.7010. The R1 at 0.7130. The R2 at 0.7280. And the R3 at 0.7455. Let's reaffirm this. Yep. Locking everything in. We tend to maintain our bullish outlook practically on two elements. The first element would be that the upward trend line has downshifted its slope, but it's still there. The second is the RSI indicator, which is currently at 66, which is pretty high. And in such a case, I would expect the price action to intensify its upward movement and start aiming for the 0.7130. On the other hand, note that okay, we have definitely a number of continuous higher peaks and continuous higher troughs, but the last peak in comparison to the one which is being created right now is not far off. So practically, it seems that the bulls are slowly but steadily losing the power, in which case there could be some stabilization here. And also, the idea of a stabilization gains traction given that the price action has hit the upper Bollinger Band. Also note that the Bollinger Bands have widened, but not significantly. So a stabilization would be also possible. In this case, we may see the price action revolving around the S1 0.7010 support line and at some point breaking the upward trend line. And some of you guys have discussed the possibility that the upward movement has started since here. Yeah, it's a possibility. Other than that, I would be noting also the possibility of a bearish movement, yet in that case, okay, for the time being it seems to be improbable, but once again it's still a possibility and should be covered. We may see the price action dropping, breaking the 0.7010. I would require a clear breaking of the upward trend line breaking as well, and start aiming, if not even testing, the 0.6880, reaching that low or even lower. It's going to take some convincing for the bears to actually adopt a bearish outlook for the pair. Let's have a look at USD CAD. Adjusting the chart. Okay, definitely the 1.3395 has been broken and has to be switched into a resistance line. Let's go hunting for a new ultimate support line. Unlocking the chart. Okay, it's a narrow one, but I note this true here. Also, this true is good. It has even some touches to the upside. Here and here. Seems good. It was tested to both sides. I'm keeping it. And that would be in green. The 0.2895. Let's adjust also the labels so we get a clear picture. The R3 is now being placed at 1.37. The R2 at 1.3525. The R1 at 1.3395. The S1 at 1.3230. The S2 at 1.3095. And the S3 at 1.2895. Let me confirm the last support line though. Yep. Locking everything in. Now let's talk about the direction. USD CAD, despite moving lower, in my opinion, it's still a bit unconvincing. And at some point, maybe we should be discussing also a recalibration of the resistance and the support lines. But for the time being, definitely seems to continue to revolve around the 1.3395 currently resistance line. We expect that the sideways motion is to continue for now. Note how the Bollinger Bands have narrowed, also implying some lowering of volatility. There are, though, elements which tend to imply that a bearish movement is also possible. And the first would be the RSI indicator, which has dropped below the reading of 50. It's currently at 39.5, so at 40.3. Also suggesting that the bears may be in play here. Also note how the 100 and the 50 moving average are still pointing downwards. So there is some bearish sentiment left, in which case, should the bears take over, we may see the price action reaching as low as the 1.3230. That would be the first stop for the bears, in my opinion. And let's have a recheck on the validity where the level rests. It has a nice double touch here, triple touch here as a support line, and held its ground, so seems to be pretty valid. In case the bulls take over, we may see the price action rising, breaking the 1.3395 and start aiming for the 1.3525. For the time being though, a bias for the sideways motion is being maintained, in which case we may see the price action continuing to revolve around the 1.3395 level. Let's have a look at gold's price. Okay, gold's price seems to have some slight bearish tendencies, but the last correction during today's European session, this green candlestick here, the fact that the RSI indicator rose a little bit above the reading of 50 tend to imply that the stabilization of the precious metals price is still present. So I wouldn't expect for the time being an intense bearish movement. Also note how the Bollinger Bands have narrowed. It's very characteristic. Also implying that volatility has been lowered, and that could be allowing for the sideways motion to continue. So overall, that should be it from all of us here at IronFX. Best wishes for solid trading.
In our session today, we will talk about what silver is, referring to spot metal tradings, and why investors prefer to trade silver. Silver is a precious metal which over the course of history has been used in the production of jewelry, coins, photography, and electronics. It has also played an important role in both cultural and religious ceremonies in the form of holy ornaments and other spiritual items. Compared to other precious metals, such as gold, silver is one of the world's most conductive metals, meaning it is highly valuable. While it's not as valuable as gold, it has a lower cost entry compared to the yellow metal. Trading silver for a currency is known as spot metal trading, which refers to the market value or cash price of the metal at the very moment it is traded. This is known as the spot price. Most investors trade precious metals such as silver because it offers the opportunity to diversify their portfolio. They also aim at hedging their positions even when the markets have a downward movement. Thank you for watching. In our next video, we will cover some more interesting facts about silver, including some top tips for trading the precious metal.
Alrighty, let's get going. So again, welcome everyone. Thank you all for attending this session. Today we are here with IronFX on a webinar series, the trading strategy session, or trading strategy clinic. So what we do here is that we will be looking for your questions. If you have any questions about your trading strategy, if you'd like to share with me your trading strategy, I'll be happy to give you my views, possibly try and help you tweak it a little bit to maybe get a more profitable or get it more consistent. So if you have any questions, please feel free to put it into the chat and let me know. All right. With that as well, what I'll be doing is I will be sharing with you how I approach the markets, what I look at, what I think about when I look at the news and the charts before getting into a trade. So I'll be sharing with you my thoughts and possibly some ideas about the markets as we go through the news and the charts. So as usual, before we get any further on, quick disclaimer, information in this webinar should not be considered as investment advice or an investment recommendation, but instead as educational material only. This material is just a personal opinion of the author, myself, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. What it means is that I will be sharing with you, or might be sharing with you, some trade ideas, some possible trade setups that I'm looking at, I could be jumping into. If you do jump into any trades, please make sure you check it. Make sure you do your own due diligence. Make sure that it fits with your own trading strategy. Okay, and then what I will always suggest is test it out first, maybe on a demo account or on a smaller trade size. Once you gain more confidence, you understand the trade itself, then you could start looking into a possibly larger trade. One other thing is that because I will be looking at quite a number of charts and quite a number of trade ideas, please make sure you check your leverage, check your margin, right? You don't want to be jumping into all the trades, because that will definitely lead you to over trading. And through my experience coaching a lot of retail traders like yourselves, it's not so much a bad trading strategy or one or two bad trades that's going to cause you a lot of problems. It's the over trading that's going to cause the biggest problem. All right, so just bear that in mind. This session is being recorded. I do believe that it will be uploaded onto YouTube. I'm not sure when, after, so immediately after or after a short delay, but it is being recorded. I do believe that it will be uploaded onto YouTube. So John just shared here, he does a breakout and a retest. Is my strategy, how can I get 80% accuracy? It's I was just actually helping a guy out with his trading strategy. He sent me his trade history, he sent me all the trades that he's just got into recently, and he had the same question as how does he get his hit rate or his success rate higher? It's not so much about the accuracy. All right, accuracy is important, but it's not so much entirely about the accuracy, because you want to consider as well your risk to reward ratios as well. All right, because if you're looking at for example, a 1:1 risk to reward, then you need your accuracy to be a lot higher. If you're looking at a 1:2 or 1:3, or even at some level 1:4 risk to reward, then your trading accuracy could be a little bit lower. Not saying that we'll just jump into random trades, but your accuracy could be a little bit lower. But understanding that for the trade with a good risk to reward ratio, it's going to be you're not going to have all your trades work out. Even, well, in general with trading, we know all trades are not going to work out, but one bad trade is going to be easily, or multiple bad trades is going to be easily covered by one good risk to reward trade. Okay, so try not to focus too much on just the accuracy alone. 80% is a very high rate to get it to. So it depends on how many trades you get into on average, what kind of risk to reward ratios you have, and then you start considering all that together with the success rate. Okay, John, so if you can give me a bit more info, I'll give you more viewpoints from that. So another question there is, what do I mean by over trading? In terms of over trading, you want to make sure, you want to calculate what's your capital amount, right? No, not calculate, but you want to understand that with your capital amount, what's the maximum trade exposure you should be having, or you can have. Okay, so and also the number of trades you can have. So for example, based on a $10,000 account, right? What I would say generally on a $10,000 account, I would say your maximum trade size or your maximum trade exposure would be one standard lot, right? At a maximum, you say is one standard lot. And then if you find yourself entering or having an average exposure of 2 or possibly even 3 trades at a time, Then because you have one standard lot, if you have on average about 2 trades at a time, you'd say that you shouldn't be entering at more than 0.5 or 5 minis at a time, because if you had 2 trades, it would be one standard lot. That would be the maximum amount. What I would normally suggest is to go even smaller than that, because you just never know when you might have that itchy finger and want to enter one more trade. So what I do tell a lot of my traders that I'm coaching, for example, if you have a $10,000 account, you could be your maximum trade size would be a one standard lot. I would say, hey, go smaller, right? I would say that even at that point, your maximum trade size should be at 0.5. Then you would have a 0.25 for the first trade, 0.25 for the second trade, and then 0.25 for the third trade. At least at that point, you still wouldn't be reaching your maximum trade exposure. Okay, that would be a very risk adverse approach to adopt, but we want to encourage the thought and the process that trading is for the long term. The trading journey is for the long term. I've seen a lot of people trade maximum size or twice as big as they should be just to try and go for that big returns, right? A lot of people have been talking about 20% returns or 50 to 75% returns in a month or in one trade. That's always possible, but you want to think about consistency rather than just that one trade or that 1 month of good results, right? So I would say, go for that 6% return in a sorry, pardon me. I would say go to the 4, 6, 8% return in a month, but aim to have your drawdown at a minimal, and then aim for that consistency with your trading rather than to try and go for that big trades. Okay, so over trading is understanding how many maximum trades you should have, and then what's your maximum trade exposure or maximum lot size exposure that you should have. Okay, I hope that makes sense to you, John. And then a question from Ruthik. Sorry if I'm mispronouncing your name. Question from Ruthik. What do you think are the 2 best indicators that work together? Okay, in terms of indicators, what I would say very quickly is that there are a lot of indicators out there. Actually, while I have that, I'll bring it up and just show you guys. Take that away. Okay, so I'll just put up a chart just to show you all the list of indicators that you can have. All right. Bring up my layout. Where is it? All right, close that out. Okay, so you can have a lot of indicators. If you go into there, you get a whole list of them and even more as well. There's really no best indicator to work, but I like how Ruthik is asking about the 2 best indicators. So you're not talking about the one best one or the one indicator to have. It's good to have a combination of indicators, and you want to have it as different style or different types of indicators, right? So you want to have an oscillator together with, like, for example, a moving average, or you would use a stochastics together with the Fibonacci. You want to have a combination of indicators just so that it doesn't all give you the same idea. Say, for example, if I used a stochastic and an RSI, right? So we have the stochastics here, we have the RSI here. It's going to give you very similar indication. It's very good, right? Using the same word, but it's going to give you very similar indication. You can see here that if I move this line right across, the stochastics pushing towards upside, the RSI pushing towards upside, it's going to give you very similar indications, and you don't want that. You don't want that same thing because it's just telling you the same thing twice over. What you want to try and do is, for example, to have the stochastics and then also use, either the Bollinger Band or like the Ichimoku cloud in this case. Take some of these lines away just to make it a bit easier to see. Okay, so if you even just consider the cloud alone, it would make it a lot easier where you have the stochastics telling you that we could see some upside move. Sorry, my throat is terrible today. And then after that, you see the cloud, or you see price. Take that all away. Right, and then you see price breaking through the cloud or some upwards to the cloud, then you'll be looking for that upward potential. So you use a combination of indicators to give you a good all-rounded view, building that confluence. Now you have a confluence of indicators working together to give you that confidence on your trade. In terms of which are the two best indicators, I'll tell you that, as I said, no real best indicator, but what I use, I'll share with you the setup I have. For me, I have the MACD. All right, and also I have the Bollinger Bands. Right, so I have the MACD just to give me an idea of how crossover levels or potential crossover levels to see either the upside or the downside, and then the Bollinger Bands to tell me when it's outside of the band, we could see a retracement back in again. So I use a combination like that. I do look at support and resistance levels as well. So I have my approach. I look at the news first. Then after that, I look at the trend, support, resistance, and then the indicators. So just based on that, you can see that I actually place very little importance on the indicators. The way I trade, more on the news, the trend, and the support resistance levels, right? So more momentum trading with breakout. I think someone mentioned about breakouts there, and then with the trend following as well. All right, so I hope I answer your question there, Ruthik. Hey, Mohal. I'm learning trading and getting used to the jargon and all. There's a lot to learn, and I'm afraid of investing any real money. What advice would you give to a newbie to trading? There's a lot bombarding info on Forex, and I'm afraid of going into wrong directions via YouTube videos and schemes. Very good question there. I would say that good thing is that you're reading a lot, you're getting used to it, you're learning a lot. I would say that, test it out, right? Test it out. You can still check out, there are some good YouTube videos just to give you the information. Test it out. There's no harm in using a demo account just to test it out and to build that strategy, to build the confidence, and to get familiar with trading to start off with. Right. So what I usually suggest to newbies is that, read it up, read stuff, learn, but very quickly as you learn, apply it onto a demo account, right? Apply it onto a demo account, test it out, see how it works. One thing you don't want to do is to spend so much time reading but not testing it out. Then you end up, having too much information, like what you're probably facing, and then after that, still not knowing what to do or where to get started on. Okay, so read it, test it on a demo account, enter demo trades. Then after you build that confidence or some confidence, you start small. You get into a small trading account and then trade at a small lot size, at a minimum lot size, just so that you see how you behave when there's real money involved, when there is a real trade and real money involved, potential profits and losses. At that point, what you want to consider, or what you don't want to be considering, is how much money you're making. you want to stick to the process. You stick to the process, test out the process, test out the confidence. Then you slowly progress along to build your trading activity and your trading profile. Okay. Hope that answers your question there, Mohal. All right. Gary asked, could you show us how you use the cloud, the Ichimoku cloud? I'll get to that shortly. And where would you place stop loss and take profit? Okay, that's easy. I'll get to that. Ruthik asks, where do we get these news about Forex from? Any particular place where we get news that help us with trades? Okay, that one's easy, so I'll answer that straight away. For me, on my screen, whenever I'm sitting in front of the computer, whenever I'm trading, first, there are two things that I will have open. I'll have my MT4 open, and also I have Forex Factory open. Okay, so I'll share with you guys the link here. Right, so Forex Factory is where I head towards to get all my news. This fantastic thing is that it's free to join. Is you don't have to pay for anything. You don't have to pay for the news. It gives you the exact timing of the news release, which currency pair it affects, what news it is, the importance level, the previous data, the forecasted, and the actual data as it gets released. So very good site to use to get your information regarding fundamental news, regarding the news on the Forex markets. All right. Fantastic. I see a thumbs flying up. So good stuff. Okay, so to Gary's question about the cloud, let me just bring that back up. I'll clear out this once so it's not so messy. Okay, so see, the simplest or the most straightforward way I would do about use the cloud, I'll clear out some of these lines because there's a bit too much information there. The most straightforward way you can approach this is that you can see the clouds, right? I'm trying to find a bit of a mix. Okay. You can see the red cloud there or the pinkish cloud there. It provides that indication, red or pinkish, for that downside move. And also it acts as a bit of a resistance level, right? Acts as a bit of a resistance level. So you can see that as price goes up, showing you further, still trading below the cloud, you're still looking at further downside with the cloud being reddish. You still say that it's trading below the cloud. So I'm still looking for some downside move with it being red. Looking at it on the H1 time frame, you can see that this one, for example, here, it's broke through the cloud. All right, it broke through the cloud. Despite it being red, we say that it's traded above the cloud. It's traded above the cloud. Now, instead of it being a resistance level, it's forming as a support level. All right, it's forming as a support level. You can see it came down, came very close to support, bounced back up again, came down very close to support, and then started being green. So now we're looking for upward moves as price trades out of that cloud. When it's in the cloud, whether it's red or green, we'd say that price is in the cloud. The direction of the move will be a little bit more varied, right? It'll be a bit more varied or choppy. So you want to wait for price to either break towards the downside or break up above the cloud before you start looking for that potential trade. Okay. Hope I answered your question there. Short and sharp there for you, Gary. And then in terms of where would I place my stop loss and take profit, let's look at not the dollar index, but the Aussie dollar here. Okay. The way I would look at my stop loss and take profits, I would say that I always have my support and resistance levels done up first. Okay, so resistance level because it's tested, came down, support level because it's tested and bounced back up. So the easiest way to think about it is that your stop loss should be beyond, okay? So your stop loss should be beyond the resistance. Let me put this as a resistance level and this one as a support level, okay? So your stop loss should always be beyond the resistance. Okay, or beyond the support level. Naturally, if you're looking to sell it down, say for example at this point, your stop loss will be beyond the resistance, and then your take profit will be before the support. So your take profit will be before the support here. Or even before the resistance level here. This is if you were looking to buy it up. So buying, take profit. This will be your selling, take profit. Okay. So as an example, if we're looking at this point here, anticipating that price could trade lower, we'd say that if we're looking to sell at this point, stop loss will be up here above the resistance level. You know, could be about 65 pips, 70 pips. Take profit will be before the support level at about this point here, about 160 pips towards the downside. You'll be looking at a 1:2.4 risk reward ratio for that selling opportunity. Okay. That also comes to the point where, you know, if you were looking to buy this towards the upside, then I would say that take profit, you know, if you're looking to buy here, would be before that resistance level. And if you're looking at this, your stop loss wouldn't be there. Your stop loss would be near that interim support level. Zoom in a little bit for you. You know, you can see that this is a bit of a support level here. Right, so I would say that this is a bit of a support, interim support level there. So I'd say if I'm buying there, my take profit before the resistance, and then my stop loss will be just below the interim support level. Okay, so quite straightforward. Remember, support, stop loss beyond resistance or support level, take profit before resistance or support level. Answer your question there, Gary. Okay, Chimponda, would you advise someone to trade in a ranging market? I have a working strategy, but sometimes I like patients to wait. How do you master psychology? I want more emphasis on psychology. All right. It depends. It depends in terms of the ranging market. It depends on your trading strategy. Okay. And also what kind of range. If we're talking about a range like that, let me just draw that out. Right, if we're talking about a range like that, then I wouldn't even be looking to trade that. Okay, but if we're talking about a range like that between here and here, right, you can see it trading down and then after that trading back up again. That's a wide range. That's a wide enough range. Then I would say I would go for that wide range as well. Okay. How to approach a ranging market? I would say that you'd be looking for, the safest way would be to look for the pre-existing trend and then trade that range based on the trend. What I mean by that is, if you look at the Aussie dollar here, it's been pushing towards the upside, right? It's been pushing up ever since October last year, and it's been trading higher. So I wouldn't be looking to sell it down. I would sit out. I know that it's a missed opportunity as it trades down, right? I'll sit out, but I'll be looking for buying opportunities towards the upside. I'll be looking to trade it towards the upside. So that way I'm still following the trend while in a ranging market. Okay, Chimponda, I hope that answers your question about ranging markets. And in terms of patience to wait and mastering psychology, I think one good approach that I've actually advised a lot of people to do is to have a bit of a punch card system, right? What's a punch card system? Is to actually have a piece of paper, and you limit yourself. You limit yourself every day to a maximum of, for example, 3 trades, right? Have a number of trades. It doesn't have to be 3. It can be any amount, not too big. Definitely less than 10. Okay. Maybe even less than 5. So anywhere from 1 to 5, 2 to 5 trades, and limit yourself to those number of trades. So that way, before you enter a trade, you'd have to really consider, is this worth one of your 5 trades for the day? Is this worth one of your 5 trades for the day? That way you build that patience to wait to really look for that one trade that you would have more confidence, you have more confluence before you jump into the trade. Okay, so I find that selection, being more selective of your trade, does help with building that patience. And in terms of mastering psychology, there is really no straightforward way to doing it. It's all about building that confidence, right? Very often, a lot of people have mentioned about trading with no emotions. I don't believe that anyone's going to be able to trade with no emotions. It's about trading with less emotions, understanding the process, keeping to the process. So, don't try and approach the markets with zero emotions. It's impossible, almost impossible to do that. I would say that you want to build that confidence and then trade based on the process. And also, one more point is that if you feel that you are stressing and worrying over a trade too much, most often the time you're possibly trading a little bit too big, right? You're possibly trading at a size which is a little bit too big. So something you want to check up on. Okay. Fantastic. Thanks for that, Gary and Chimponda. Okay. I love the questions, guys. Just keep it coming. Hey, Ruben, how you doing? You beginner. Oh, I just shared the process on how to get started, so I hope you caught that as well. Bollinger Bands and Fibonacci retracements, I can do that. How do you determine a strong support and resistance levels and what time frame? Okay, so I'll share with you how I approach the markets, and then we'll touch on the other parts. I'll bring up one more clean chart here. Okay, so how I actually approach the markets. First off, I would always check the news, right? I'll look at Forex Factory, check the news, see what has moved the markets recently. If there is a big news event, great. For example, tomorrow we do have a lot of non-farm payroll numbers. US employment numbers going to be possibly high volatility event. So I'll be very careful about entering a trade before the news, 9:30 GMT plus 8. I'll check the news first, and then I'll look into the charts. In terms of time frame that John was asking about, my support and resistance levels, I do it on the H4 time frame. All right, I do my support and resistance levels on the H4. So for example, in this case, on the Kiwi dollar H4, I would have a support level at this 0.6242 level. Someone asked a question about, can't remember where I saw that question. Okay, but you don't want to consider support level as one line. You want to consider a support level as much as 0.6228 all the way to 0.6257. I would consider this whole area as my support area. And because I consider this whole thing as my support, I'll move this to right in the middle, and then I'll have that as my support level, right? But I still would consider it as a whole area And if we zoomed right across, you can see how price has reacted very nicely to that area as well. Okay, so first off, I'll do my support levels. I'll do my resistance levels here. And then maybe a next one up there as well. Okay, so I do my analysis on the H4 time frame in terms of support and resistance levels. I'll be looking for a trade on the H4 time frame first. If in this case, let's say, I'm right here and I can't find a trade on the H4 because price is right in the middle of the support and the resistance level, then I would go into the H1 time frame. Then I'll be looking, in this case, no trade, but I'll be looking for a trade on the H1. So I'll do H4 first, then down to H1. If I were, sitting there watching the charts closely, then I might even consider going into the M15, looking for potential breakouts of short-term consolidation areas. Okay. For most retail traders, or for all retail traders, I would say that I wouldn't go anywhere lower than the M15. For me, I look at M1 or M5 only when there's a big news event. All right. Okay. So answer your question there on support, resistance, and time frame. So when we have that, with that, then looking at Bollinger Bands, the way I use Bollinger Bands is only to tell me when it's too late to get into a trade or when it's time to get out of a trade. What I mean by that is you can see that, let's say for in this case, price breaking through that support level, you'll be anticipating to buy. What I've noticed is that when price breaks out of the Bollinger Band, right? When price breaks out of the Bollinger Band, it tends to retrace back down. Right, it tends to retrace back down. You can see several other situations here. As it breaks out, it retraces back down again. Not always, this is possibly a news event that has got strong momentum to push price towards the upside, but once it stays out and hits a resistance level, that's where we get a confluence, and then you see it come back down again. Right, you can see again, very nice one here. Price breaks out of the Bollinger Band. Next moment, it retraces back in. So it tells me when it's too late. Most of the time, a lot of traders would see a big move like that, and then you click sell right there. Once you click sell there, it retraces back up. You hit a stop loss or be in a losing position. This tells me it's too late to get into a trade. I'll wait it out until it hits and turns from maybe even the moving average lying there before selling it back down again. Okay, so that's the Bollinger Bands. It works on all time frames. You can use it, M15, even on H1 time frame. You can see that it breaks out, bounces back in. In this case, this prevents or this saves you from a potential fake break, right? As price breaks out of a Bollinger Band, you anticipate that it's going to trace back in. So I will wait for it to come back in before looking for a buying opportunity. And in this case, a pin bar formed. We know that it's going to trade lower again. Okay, so again, another save as it breaks out of Bollinger Band before coming back in. This same thing here, broke out. Next moment, it traces back in towards the Bollinger before trading lower again, sits across before turning back up. All right. So that's quite straightforward there on the Bollinger Band. The next one about Fibonacci, you can actually be looking at it here. Oops, no, take that away. So Fibonacci, you would go from left to right, from the lowest point to the highest point, and then you apply the Fibonacci's. You can see it acts a bit as a support, as a bit of a support and resistance level. In this case, zooming in a little bit, you can see that from this point up, right, we've drawn this towards the upside here. Okay, so it shows you that as it comes down, you can see that price retraced from the top downwards, and it's bounced 23.6 level. It hit and bounced. Once it broke that level, 38.2 again provided some level of support. 50%, very strong support level here, bounced off, and then it still traded within this range, now bouncing back up again. So the key level here is 61.8. It's come very close, but it hasn't tested that point. Okay, so quite straightforward there on the Fibonacci. I would say pay attention to those three levels in particular: 38.2, 50%, and 61.8. Okay. So far, so good, guys. If it makes sense to you all, let me know. What's your go-to trending strategy and what indicators you use? I just shared that with you, Gary. Trending scenarios, so I look for trend following strategies or trend following trades. My indicators, MACD and the Bollinger Band. All right, I'm looking. No worries, Moha. Can you explain what support and resistance level is and what it does in the charts? Okay, let's bring up another chart here. Clear it out a little bit and look at H4 time frame. Okay, so what is support and resistance levels? It's really identifying the points, right? The turning points. So I would classify it as turning points where you see price come down, hit and reverse, hit and reverse, right? So it says that in this point, this level there is a good support level, support being a floor, and then a resistance level being at about this point there, or even, at that point there being the resistance level, resistance being the roof. So it provides a bit of a, not fixed, but a bit of a constraint or boundary to help you identify potential levels that price could move towards. What we tend to find is that once we have identified these levels, price tends to, only if it breaks out of this strongly, closing above this level, then we'll see it climb to the next level. So you can identify this turning point here. So if we did draw a line right across, you can see that as we identify there, we have turning points right at this point, bit of a turning point here, and then a bit of a turning point here as well. So if price does break above this resistance level, we could see it climb up towards the next resistance level. So it goes from roof to roof, or from roof to floor and floor to floor. All right, fantastic, good stuff. How many pairs would you advise someone to focus on, or in short, how many asset classes would you ever recommend a retail trader to trade? I would say that you should be looking at about 4 to 6 pairs, currency pairs at a time, right? So for myself, I look at 8 to 10, right? I have a big screen. I have all 8 pairs open up. So I'm monitoring all 8 pairs at a time, but I do know that retail traders don't have all that time to look at all those pairs, right? And also when you look at that many pairs, you need to read all the news and understand all of it together. So I'll say, start off with 2, right? Find 2 currency pairs. And it shouldn't be the same or similar ones, right? So it shouldn't be Aussie dollar and Kiwi dollar. It shouldn't be euro dollar and pound dollar. Kind of think of it as maybe an Aussie dollar and a euro dollar, or a Kiwi dollar and a pound dollar. So you get a good mix of market open timings. And then once you get familiar with those pairs, you can add 1 or 2 more after that. So try and have about 4. I think that's a reasonable amount. Fits on the screen nicely as well. Then you can focus on that 4 to try and take advantage of the moves. Okay. How do you maintain a healthy trading psychology after losing, let's say, more than 2 consecutive trades? Very straightforward. The first thing to do, stop trading, right? If you hit 2 consecutive trades, straight away, turn off MT4, turn off everything, stop trading, go do something non-trading related. Go clear your mind, because if you sit there and go, oh, I've just hit 2 stop losses, right now I need to chase it back, I need to make it back, most likely you're going to hit the 3rd stop loss, right? You're going to be rushing to trade, you're going to be guessing and trying to revenge trade it. So first thing, stop trading right away. And then after that, you can always, reach out, test it, back test your strategy again, right? So after you've taken a break, back test your strategy again, just so that you understand it, have that process tied down and understood, then look back into it and start off and just have the understanding to start off fresh, right? Forget about the 2 trades. Start off again with the same process, going, okay, now it's almost clean slate, brand new, what to do again. I hope that helps. I hope that helps you, promise. Okay, so walk away, take a break, then review the strategy and the process. And then after that, when you start trading, forget about what happened before, start off as if it's a brand new slate. John asks, what trading sessions do you recommend with high volatility? Well, definitely the US, definitely the crossover period between London and the US session. So in terms of GMT plus 8, I would say is the 8 to 9 p.m. GMT plus 8. So that's when US is open. Show it to you here. So you see that a lot of news happens at about 9 to 10 o'clock. So 8, 9, 10 o'clock, GMT plus 8 would be the best high volatility, high liquidity periods to be trading. You got to convert that to your own time zone, but that's where we have US markets being opened, and we can see that liquidity being increased. Okay, so you can also, if you use Forex Factory, you can scroll down and you can actually check out the session timing. So you can see right now we are having London being opened, US not opened yet. So we come to 9 p.m. GMT plus 8, we'll have the crossover between London and the US. That's when we're going to see volatility and liquidity being higher. Any advice on currency pairs to start off with? My own currency is fairly weak in money already. I would say that currency pairs to start with. What's the time zone in? Sorry, I'm just going to check this. Current time in South Africa. So it's 12:47 p.m. I would say that the pound dollar would be a good one to be looking at, because you notice if you start trading onto this or start monitoring this, you might be looking at better liquidity on the pound dollar as within your reasonable time frame, right? So I wouldn't say I wouldn't recommend Aussie dollar or the Kiwi dollar, because that would be really early in the morning for you guys. Then you wouldn't want to be trading during that time as well. So pound dollar, euro dollar, pound dollar, maybe even the US CAD, if you're looking to trade later into the day, there'd be a good pairs to start off with. All right there, Mahal. Good stuff. Thank you all for the questions. I hope you have found it good information, useful and good information for you guys. Any other questions? How many trades do you think are more than enough for one day? Okay, so very good question. Personally, for me, I average about 2 to 3 trades a day. My average, and I've been trading for many years now. It's about 2 to 3 trades a day. But that said, remember it's an average, so it could be days where I have 0 trades. I have no trade at all. Market's not moving, or I just can't seem to make sense of what's happening in the market, so I wouldn't enter a trade. But there are days where we would have a lot of trades just because it's a high volatility news event, right? And markets are trending strongly in a certain direction. Then I would have, more trading opportunities. I'll be entering into more trades. So what I find is that on average, about 2 to 3 trades would be fair. All right. You're most welcome there, Mohal. Any further questions? Time has really flown. I've been enjoying the session. Time has really flown. So are DBBs similar to BBs? I'm not sure what DBBs are. I'm not sure what DBBs are. So you want to elaborate on that? Okay, double Bollinger Bands. Okay, so how I have my Bollinger Bands, let me just clear it out. I have my Bollinger Bands like that. One other thing I've done with Bollinger Bands is, I'm not sure if it's the same one that you're talking about, is that I have the 2 standard deviation and also I have the 1 standard deviation Bollinger Bands. Is that the double ones that you're talking about? So why I have the 1 and 2 standard deviations is because what I tend to notice is that if price trades, possibly not so much here. Let me find a seat. Okay, there you go. So if price trades within if price trades within the 1 and 2 standard deviation within the Bollinger Bands, it becomes a bit of a trending scenario. So that's the only reason why I would have the 1 and 2 standard deviation on my Bollinger Bands, just to identify that trending scenario in terms of Bollinger Bands. But a lot of people have said that it does make it a little bit messy in terms of the charts. So, you could even just deal with one single, the 2 standard deviation Bollinger Bands. Yeah, it does. And when you have 8 charts open, imagine looking at it like, imagine looking at it like that with double Bollinger Bands all over. It's just going to be super messy and almost impossible to pay attention to. Okay. I take profit quickly and delay to close my losses. What do I do? What time frame do you do it on, John? One way you could try is going to make you go slightly crazy, but one way you could try is to enter a trade and walk away. Have your stop loss set, have your take profit set, and walk away. Go do something else. Come back in an hour, in 15 minutes or an hour's time, check it, and then if it's hit take profit or stop loss, great. If it's still sitting in the middle, reevaluate. Is there a reason why you want to close out the trade? Find the reason why you want to close the trade. If there is, go for it. If not, walk away again, come back again. All right. I hope that helps. I do that as well. I enter a trade and I go work on something else. I don't pay attention to the charts, and then I'll reevaluate once in a while. I have a community of over 10,000 users. I want to participate because information I have gotten is too. What risk percentage would you recommend on a $500 account and reward. Risk, in terms of risk, maximum risk per trade should be at 2%. Maximum risk per trade should be at about 2%. What I would say is that just be extra careful about that number, because if you have one trade open, it can be 2%. But if you have two trades open, then your maximum risk per trade should be 1%, right? Because your maximum exposure should be 2%, right? Because the common saying is 2% per trade, but then you see people entering multiple trades, and then it's all 2% over and over again. That's going to be super dangerous. I would say is that your maximum exposure should be 2%. Always struggle to know when to let profits run and exit. I'll answer that question already, Gary. Okay. Chimpona newbies participate. Great. Good stuff. All right. A tour, I'm pretty sure is recorded. Reach out to the guys at IronFX. I'm pretty sure they can direct you to where to get a copy of this session. I'm glad you guys are all finding this useful. We're heading towards the end of the session, so let me know if you have any last questions. Any final questions? Just remember that we do have US non-farm payrolls tomorrow, so just be extra careful on that. Any news strategy? I think you mean news trading strategies. I would say that most retail traders should stay away from news trading strategies for now, because what traders tend to do is try and rush into a trade when you have a news release. That's possibly going to cause you more heartache and more problems as you try to rush into that. So just be extra careful there. What you guys can do, I would suggest, is that you can reach out to me if you want to find out more. If you want to find out more, you can reach out to me here. You can jump onto TradingView. Reach out to me there, drop me a message. If you have any questions, any further questions, I'll be happy to help you with that as well. I do some analysis about, where prices are heading, looking at fundamentals, how to trade the news, how to, a bit of a review of what happened last year. So it's all there, giving you analysis, trade ideas, psychology, and all that. What do you think about the market for the next few weeks or months as recession is inevitable and heading towards the market? That's a good last question, but that's a big last question. I think that recession is inevitable, and it's possibly slightly priced in already. So I think it is going to be a good market for traders. Volatility is going to be high, a lot of opportunities to be had. I would approach the markets with a possibly shorter term view on trades, right? So whatever trades I get into within the day, intraday trades, or within the next couple of days, I'll close it out, just because it has been very choppy price action. So I wouldn't be holding on to trades for too long, right? So an example here, you can see on the Aussie dollar, you can see that just get that out. Okay, you can see that just on Tuesday, so 2-3 days ago, it shot straight down towards that 6697 or 67 level, and then almost immediately it bounced straight up towards 6880, right? So very high volatility situations or choppy price actions on the Aussie dollar, and actually right across the board. So I would say, short-term trades. If, for example, you look to sell and you thought that it was going to go all the way down, you'll be caught out as it bounces back up again. So short-term trade downwards and then back up again, or look for that trending scenario. Okay, Ruthik. With that said, I hope you guys have enjoyed the session. Hope you found it very good and informative. If you have, please let me know. I do appreciate the feedback. And do remember, we have news ahead. We have possibly recession ahead. Choppy and volatile price action coming into the markets. Please trade well, trade safe, and I look forward to seeing you at the next webinar again. With that said, take care now, and I'll end the session. You're most welcome, everyone. Thanks, Gary. Thanks, John. The link is there, Ruthik. You can reach out to me at this point. Drop me a message, and I'll be happy to have a chat. Take care now. Bye-bye.
Session today, we want to continue with trading insights about silver and look at what affects the price of the precious metal. Silver prices are not easily influenced or affected by political or economic events. This is because it is viewed as having an inherent value, meaning that its value is protected against times of financial stress or political instability. When compared with gold, the price of silver tends to be much more volatile, while a much higher proportion is used in industry than the yellow metal. The price of silver is dependent on supply and demand. In terms of supply, silver has the largest volume compared with other precious metals. Meanwhile, the mining of silver has substantially increased over the past few years and is often a co-product of either mined minerals, such as gold and copper. Due to its wide use in industrial fabrication in products such as conductors, switches and fuses, silver prices can be affected by industrial output levels in terms of production volume. The price of silver tends to follow the price of gold. Although this is not set rule or formula, there is some evidence that a price correlation exists between the two precious metals. As the world's leading currency, the US dollar has an impact on the price of silver. The price direction of the dollar has an inverse effect on silver, meaning that the precious metal can be an appealing investment when the dollar is low. Thank you for watching. This third part completes our series on trading silver. Stay tuned for more exciting educational videos.